when you have trust and in this mindset of creditor protection, you have two pieces to talk about distributing. You have what's called the net income, which is essentially interest and dividends net of any kind of expenses like investment advisory fees, professional fees. What's net, that would be considered net income. You can say that. And then principal is the corpus of the trust. So there are distribution standards. There's something called the ascertainable standard in the Internal Revenue Code. It's defined as HEMS, health, so any medical expense for any purpose, education, any level of education expense from preschool all the way up to, post baccalaureate, doctoral studies, whatever, and trade schools, any kind of education. And then maintenance and support. Maintenance and support is a pretty broad description of essentially keeping your beneficiary at the standard of living to which they become accustomed. So you keep them here, not all the way up here, not down here, where they're living right now. You keep them, so that's housing, clothing, food, shelter, car, that kind of reasonable entertainment. If they usually take vacation of a certain amount, then that's fine, but not a 6-month trip to Europe, that kind of a thing. You can also put in things about purchasing a home. The trustee can use the money to start a business, pay for a wedding. And then there's a more general distribution standard of any purpose. That might be more for a spouse, but you may want to control and tailor it a little further for other beneficiaries. So we talk about trusts in a will, and there's several different types of trusts that we can essentially build into a will, right? You have trusts that a marital trust. We'll talk a little bit about that more later. And a marital trust is a trust that's for a spouse. You can have a qualified domestic trust, which is for a spouse that's not a citizen. You can have a credit shelter trust, which more on that later. That's more for there are tax reasons there. And then you also have a descendants trust. That's a trust we keep it broad. So that could be children, grandchildren, great-grandchildren. That's a term that we like to use in our documents. And then you have something called a supplemental needs trust. A supplemental needs trust is a great tool to utilize in your will when you have a beneficiary who may need in the future or may currently receive governmental benefits. Having the assets that this beneficiary would inherit be left to them in a supplemental or a special needs trust will enable them to use that money as a backstop, and it will have them, as the name suggests, supplement their lifestyle instead of supplant any benefits that they could be receiving from the government.